Now, another day of Bitcoin dumping, stocks dumping. Do you think we're finally confirmed in the bear market now? Let me show you. There is actually a very good explanation for what's happening. All of this happened at the same time. It wasn't just Bitcoin, stocks, everything dumped pretty much at the same time, right? This is see this down here? This says Sunday night, say the timeline, Sunday night, 23 hours, which is 11 p.m. This is Greenwich Mean Time, right? And that's basically UK time. And the stocks dumped at the exact same hour. Like here. See here? 23 Sunday, 30th of November, right? It's basically, here it was Friday, 28th of November. Stocks closed on Friday afternoon, 6 p.m. And then they reopened Sunday, right? Sunday night, 11 p.m., which is UK time, but this is around 6 p.m. US time. And look, that's basically the massive dump. And also Bitcoin dumped as well, right? As we just saw, exact same time on the Sunday open here, right? 23rd. So it's pretty obvious that this is a stock-driven move. Stock market led the move. This is the NASDAQ 100 mini futures, which was trading on Sunday night, and led the move with the Bitcoin dump exactly as it happened. But what actually caused this move? What actually caused this move? I'm going to talk about today the technical reasons, right, and also the fundamental reasons. Well, the technical reasons is obviously something that we've expected all along. Like this 92K area has been spoken about for a long time. If you've been watching my videos, I did say two scenarios. I thought, okay, in one scenario, I thought we're going to get some sort of double bottom at around 80K. Perhaps push down to 78, 79, we bottom, and then up we go. But when do we turn down? I thought, okay, 92 to 94K here, we turn down. And then when there were so much shorts, right, we saw the funding rates going very green, I thought maybe we can push up a little bit further to mid or even high 90s before we turn down, right, double bottom. I always thought we would do a double bottom. It's just a question of when do we turn down, right? And we can see how important this 92K is and also this 94K area. I've spoken about this many times in my Discord and in these videos, so I'm not going to repeat that. But what caused this? What's the fundamental reason that's causing this? Okay, it's actually this. Finally, it's the Japanese market is striking again. Remember how they call the reverse carry trade that crashed Bitcoin to 49K in August last year? That's happened again. Look at this. This was Friday, as we can see the timestamp down here, Friday, 5 p.m. And the market opens Monday or Sunday evening, Monday, and it opens as it gaps up, right? Gaps up, right? Gaps up. This is only 1 hour later compared to the chart I just showed you guys. And interest rates ran up from 1.8% to 1.89% in Japanese 10-year bond yields. And that's what crashed the NASDAQ, and that's what also crashed the Bitcoin, and also it's not just those two. What people, I hope people understand why this is so important, because this is what happened last year, right? This is what happened last year. It's not like I haven't spoken about this. I've spoken a lot about it. This was August the 5th crash, right? Bitcoin went to 49K. It went from like 70K, well, he was 74K. We went through that painful 6-month consolidation, bull flag, if you want to call it, and then boom, down to 49K, right? So that's how big of a deal this is, and eventually recovered and bounced. And even in stocks, like let me just show you guys in stocks. All right, this is the NASDAQ futures, but that's okay. We can see it anyway. We can still see it anyway. It's happened also exactly on August the 5th as well. Last year should be here. It's not difficult to find. We just have to find the biggest drop. See this, August the 5th. NASDAQ went from 21,000, almost 21,000, crashed down to 17,000. So that's what, like 3,500-4,000 points move, which is basically 15% move, roughly 15% crash on the NASDAQ when the Japanese did this. What happened was actually same thing again. Let me show you guys. August last year, let me put it on the yearly chart so we can see it better, right? It was basically caused by the US dollar crashing against Japanese yen. This was August last year, right? Boom, we've gone from 161, 162 down to 140. That's a big crash for a major currency like the Japanese yen, right? But what happens to Bitcoin and the stock market from here onwards? Before we answer that question, first let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses exchange that's non-KYC. That means you don't need to show any ID. That means even the exchange can't see who you are. So that means the exchange can't see you, the IRS can't see you, the tax office can't see you, FBI, CIA, nobody can see you, total privacy. So that's why I made this deal with them only on the Pablo He-Man link. For first-time depositors and first trades, get these great deals. And even if you're not a first-time depositor, that's okay. Just use a new email, different email, and just register, right? Because the exchange can't even see who you are. So they'll think you're a first-time depositor or a trader, right? So, oops. Deposit $100, get $20. Deposit $1,000, get $200. You get the idea, 20%. First trade, get anywhere between $10 to $500 futures bonus. And if you're watching this on YouTube right now, then the link is in the description below. The link is in the description below. But on any other platform, such as this one, that's okay. Just click on my profile page, and there's my link tree or stand link. We click on that, and it's the first deal that pops up because this is a great deal. Okay, let's get back to the markets, folks. Just remember, this deal is only available on the Pablo He-Man link. Only on the Pablo link. So now, we go to okay, this is essentially, I've explained this before and I'll quickly explain it again. I think my audience is smart. You guys have been watching this for a while, so you know this, and especially my Discord, you should know this already. What happened is basically because Japanese interest rates used to be so low, and we can see here, if we put it onto an all-time chart, it used to be like, this is a 10-year bond. To borrow Japanese, to borrow the Japanese government, wow, was negative. Yeah, no joke. That's not a mistake. It was negative. Negative, right? Interest rates were below zero. It was so negative. Everyone borrowed from Japan. Everyone borrowed money from Japan and used that money to buy US government bonds. Imagine if you borrow from Japan at 0.001% interest rate, and then you could buy a US government bond at 5%, you're making 5% for nothing. And you're like, oh, who cares about 5%? But Wall Street hedge funds do, because they would borrow like $1 billion or $10 billion or $100 billion from Japanese banks. And what's 5% on that? $5 billion for doing nothing, for just borrowing and buying some US government bonds. They call that the safest thing in the world. Anyways, and when you do that, not only do you make money in bonds, also the Japanese yen goes down. So when you have to pay back 100 billion Japanese yen, it goes down, then you have to pay back even less. This is what happens. See, the rate hike cycle, remember when US started hiking rates around 2022? Boom. Japanese yen went from 115 to 151. So around here, $1 equals 115 Japanese yen, and you have to pay, well, here, $1 equals 150. So US dollar has gone up against the Japanese yen, which means you have to pay back a lot less in US dollars, right? When your bond matures and you get paid in your coupons, you just use like 80% of the US dollars that you needed before, and you could pay it all back. So it works out in so many ways. That's why this is such a popular trade. There are literally like $2 or $3 trillion, I say not billion, $1 trillion in the US bond market, and some in the US stock market like Nvidia, because of this trade. So what happens that's why in August last year here, that's why there was this massive panic, because Japanese yen dropped like this. When it drops like this, that means what? That means the US dollar is going down against Japanese yen. That means Japanese yen is getting stronger, US dollar getting weaker. When that happens, of course, that means you need more US dollars to pay back your Japanese yen loan, right? So that's why the market panicked, and so they were selling their US stocks, US bonds in a hurry. That's what caused the crash in US bond market and in the Bitcoin market. And it all happened around here, August the 5th, right? On the same day. And that's what we saw today as well, but not as bad because look, let me just show you guys. Stocks have recovered. This is NASDAQ. They have recovered. See, it hit gap down on the open here, went down a little bit, opened up, and closed here, right? Same for the SP 500, right? Like they're only down 0.4% each, right? Open here, gap down, right? And then went up and got pushed down to slightly down here. The good news is, right, the SP 500 stood the test of this breakout. We could go up, retest, and then go up again. NASDAQ, same thing. Is this a bull flag? Breakout, retest. We're staying above so far, and we could go up again. And the one question I want to ask people who are freaking out about this is this. I don't have 100% the answers, but I can guide you to where the market is actually going. So for example, why is it that back last year when the Japanese yen bonds were, let's find August the 5th. August the 5th was here. We just have to find the biggest red candle. Here was biggest red candle. Here, August the 1st. That's the monthly candle. Or if you want to put it on weekly, we can put it on weekly. Here we go. August. Yeah, August the 5th. The drop between July and August 5th. Here is this big drop. And yet interest rates, 10-year interest rates, was only 1.10% in Japan. 1.10%. Now it's 1.88, 1.9%, almost doubled. At 1.10%, markets freaked out and had that big crash. So how come at now 1.9%, we're only getting, the stock market only had a minor pullback, right? Here, right, stock market freaked out, and here, stock market is actually doing okay, right? That's the stock market's reaction. And whilst August, this 15% drop, this was the stock market's reaction last time when Bitcoin went to when the Japanese yields went down, right? Went up. It went up to 1.10%. Why is that? I don't think anybody's going to tell you. I don't think anyone can explain this except Pablo. Are you ready? Are you ready? Pablo is the only one who can explain this. By the way, I'll have some good news, very good news for folks who are crypto traders, gold or silver traders, investors near the end of the video. Let me just explain this very important concept first. Why is this happening? Why is this happening? So here's this one chart that is very, very special. They've done it badly because they used both blues. But the light blue, there's a light blue, see here, and a dark blue. The light blue, I'll go with dark blue first because it's easier to understand. Dark blue is US dollar, Japanese yen, right? The chart we just saw. It's at 155 right now. Essentially exchange rate of US dollars to Japanese yen. Light blue, this line here, is US 10-year yield minus the Japanese 10-year yield. Japanese 10-year yield is really low, like we saw. It went negative, like 0. Now it's like 1.8%, whatever. US 10-year yield is something like 4% right now. So you use the US 10-year yield to minus the Japanese 10-year yield. The difference between the two yields is something like 2.2% right now, right? Okay, yeah, exactly, 2.167. That's where we are, the light blue, 2.167%. Right. This line is the Japanese yen exchange rate against US dollars. This line is the 10-year yield, right? And look at this. Usually, since COVID, they've basically gone almost in sync with each other, right? So what happens is if the Japanese yen crashed with the difference in the interest rates, in the yield, then yes, the market would panic. But see how they used to move in sync, and yet now they've opened up this big gap, like a crocodile jaw, right? Crocodile's jaw. And that's why the market hasn't crashed yet, right? It's not unusual because sometimes it does happen. Sometimes it does happen, right? It's like I said, people borrowed a lot of money in Japanese yen. And because the Japanese yen, the US dollar is still going up against the Japanese yen, so they're okay. But if it turned down, like what happened in August here, then the market would, 2024 here, the market would freak out. Like here, right? We didn't have that just yet. We didn't have that. We didn't have the US dollar crashing against the Japanese yen. That's why. For folks who are smart, intelligent, who want to understand this, as I said, you borrow in Japanese yen, which is like 0%, right? 3 or 4 years ago, and then you buy US bonds, which is like 4 or 5%. You make 5% for doing nothing. See the blue line here? That's what it is. US yield minus Japanese 10-year yield, and it was up here before. It was like 3%. 3% used to be even higher. Used to be even higher than this before, and so therefore, okay, here, 4%. Yeah, 4%. That's as high as it got. You got 4% for doing nothing, just by holding it, right? So that's why basically you now have now this 4% is gone down to 2%. It's halved. So there's not a lot more motivation for people to do this, what they call carry trade. So therefore, there's less money going into borrowing from Japan, going to the US. That's why Japanese exchange rate are expected to come down. That's why the market is panicking. Okay, so for the smart folks, you understood all that, right? I mean that's a pretty detailed explanation. You should know what to expect going forward. But the good news is, for everybody, the good news is this. Basically, what I want to tell everyone is that the Trump will nominate Federal Reserve Chairman to replace Jerome Powell. It'll be Kevin Hassett. Kevin Hassett, right? I've done a full episode over this, and this is such bullish news. Kevin Hassett is a degen. He wrote a book called Dow 36,000, saying the Dow Jones index will go to, that's like SP 500, will go to 36,000 when the SP 500, or when the Dow Jones was only at 9,000. It didn't happen for another 23 years. That's like people who are calling Bitcoin to $3 million. It probably won't happen for another 23 years, right? Even if Bitcoin goes to $1 million, it's not $3 million, is it? Bitcoin may not hit $3 or $2 million for another 23 years, if it ever gets there. He wrote a book like that in 1999, and a year later, the Dow Jones crashed like 50%. He's a degen, right? Degen, he's a moon boy. Christopher Waller is only 12% right now. Christopher Waller is actually one of the Federal Reserve presidents, right? On executive presidents right now. They're not using a guy who's responsible and who's like inside the Federal Reserve right now. They're using the guy who almost never worked there. And he will, if he is confirmed by the Congress, then Senate, then he will have to be sworn in by Feb next year. By Feb next year to be one of the Fed chairmen. I'm not sure if he's going to be a voting chairman or not, but imagine if he starts voting, then every meeting is going to be a rate cut, right? If he doesn't vote, then he would come in May 2026 to replace Jerome Powell, but he's going to be the shadow chairman. He's going to be the guy saying, hey guys, we need to cut rates. Jerome Powell is doing a really bad job. I can't wait to take over right now and start cutting rates. Can you imagine what kind of Federal Reserve that will be? He will put so much pressure on Jerome Powell. He will come in and cut rates, and he will come in and do aggressive QE. Not like people are saying, oh, end of QT. People are saying like, end of QT. This was end of QT. They didn't do QE. They only did this thing called repos. It wasn't very aggressive. Well, this guy's going to come in and go very, very aggressive when he comes in. I think it's going to be different than 2019, right? So stay tuned, folks. I still remain bullish. I think there's still 70% chance we make a new all-time high in Bitcoin. Okay, thank you for your time. Catch you next episode.